What is going on, Alpha Hunters? It is a very lovely day. It's a wonderful Hump Day Wednesday. We also got a very good inflation data actually out this morning. You can tell the market gapped up pretty good. It's currently reacting to Fed interest rate decision. Not really a big deal in my perspective right now. As a lot of it is, I feel like unlike 2022 and 20 and probably even more of like the earlier parts of 2023, we haven't really got we're not really in that time period where we don't know what the Fed's gonna do. All right, it's not surprising that they are holding all the time, right? I mean, the market's expecting it. I think everybody's kind of getting on the same page about economic data and what that means going forward and all that kind of stuff, especially as we get data. And one of the things that we can kind of look at a little later is the Fed Watch tool, the FOMC CME Fed Watch tool. So we can check this out a little bit later. And yeah, so I mean, there's not much reason to talk about it. Not to say that the market's not going to react like it is right now, but I think the thing the market's mostly going to react more from now is any kind of hints and information the FOMC, the Fed committee, can give it on the future, on what their plan is for the future, about rate cuts and dot plots and all that kind of stuff. Like, what's their plan going forward? So we're not going to get that right now. Like, the hold is, I mean, this is a nothing move compared to what we've had over the previous 2.5 years, right? 2.5 years, like we would have been moved, we would have moved like 1% by now already. You know, those were crazy times. So, yeah, just gonna be dialing back. I guess really don't really need to be talking about these kind of time periods anymore. We'll just kind of keep it focused on what we need to know, what we need to talk about. And really, when we get to tomorrow, we can kind of recap what the Fed talked about, especially if they said anything that was different than what they said before, off key, or kind of important to kind of know. You know, we can recap a lot of that stuff. But we did gap up about 0.9% on the SPY today. We did get some inflation data. We got that CPI stuff, but we get the inflation rate came in at 3.3%. The market was expecting 3.4%. The prior was also 3.4%. But like, is it? It's. I mean, it's still just hanging. It's just chopping sideways, and like the market expecting like a big win, like this is really dropping off. And it's not, but like it's not continuing up, and that's probably the better thing. They just still got to get inflation to drop off. I still don't think this is a great measurement of inflation because this only takes into account price and not debt inflation, which is, you know, this is price inflation, not cost inflation, right? If you finance something, the cost of it, because interest rates are much higher than they were over the previous, 4 years, is a lot higher, right? Think housing, anything like longer term loan, 4 years and longer, which a lot of auto loans, maybe some furniture loans, but business loans, real estate loans, commercial, residential, all that kind of stuff. But regardless, I mean, the market's going to react to data points that it deems important, and we got a pretty good one. We got inflation actually come in under the expected. So that's, I mean, that's good. That hasn't happened much over the past like 2.5, 3 years. So that's, I mean, the market will take the W when it can. But yeah, currently up about 0.9%. We did have a little bit of a push there in the first hour. But other than that, just kind of settled out. Kind of a little bit of drop here over the past 30 minutes. Obviously, we just got the Fed interest rate decision. Most likely hold because this is a very mellow reaction. So I'd imagine we got to hold. Couldn't imagine any other scenario there. Q's nice strong day. The Q's were strong yesterday, basically from one stock, AAPL. AAPL doing pretty good again today. Looks like they're up about 4.9%. I need to add Nvidia maybe to this list here of Apple, Microsoft, and Nvidia, the three largest ones, right? We're gonna do that real quick. NVDA. There we go. So I'm gonna put these actually in order of market cap. Keep track of Microsoft a little bit more. These two go back and forth, I'd imagine. Anyways, yeah, Microsoft or Alpha. The Qs. Nice run this morning. Continuing to push higher, looking pretty good there. IWM though, IWM inflation coming down is really good for the IWM small caps and that kind of stuff. Nice gap up, huge gap up, still up over about 2.15%. This is a huge gap up. I'm gonna measure this sucker. 2.6% on a gap up today. Man, I love it. Nice bullish hour, but then just steadily kind of gave it back. Nice little drop here over the past 5-10 minutes, 7 minutes, 8 minutes. Okay. DIA is going to do something here in a second. It's always kind of nice when things don't load. All right, we'll just go to the RSP. RSP. Nice gap up. Kind of just choppy there in the first hour and just kind of steadily selling down. Okay, RSP currently up about 0.6% on the day. All right. Well, it's kind of liking it on that breakdown, but I mean, people still want to sell it. People are still wanting to sell it. Took the opportunity to sell it today. DIA, even though it did have a pretty good gap up, couldn't really talk intraday about it, but it did gap up about 0.96%. But it's sold all the way down. It's basically even. Okay, so DIA. We are seeing some selling somewhere out there in the markets. We'll have to take a look. IWM looking pretty good. Nice gap up. Definitely broke a lot of resistances on this gap up. So this could definitely be a game changer for the IWM. Because you're now going to have all these levels down below it are going to be most likely they're going to be buyers. They're going to be buyers. I think the one caveat that might be is it didn't take out this high from June 3rd. So unless it kind of reverses course by the end of the day and starts to rally and turn higher and closes over like 205 area, that would look really, really good to continue higher. But yeah, we'll just have to wait and see on the close. Qs, yeah, another pretty strong day. Nice day gap up on the day there. SPY looking pretty good. Nice gap up here on the SPY. Okay, so that's how things kind of look. The VIX, VIX coming down a little bit. Okay. Dollar dropping off. Yeah, we saw dollar and yields. This could be the dollar move though. So we got this little double bottom right here. We got that explosion higher on the DXY. Well, we just came down and retested right into that W point right there in the middle. So it's an interesting spot. It is an interesting spot. It's kind of like, okay, which way are we going here? Was the double bottom, like that's the move? We just got the very quick retest. Now we're going to bounce, or was this just desperate overextension and we're just going to drop off here? I could play that either way. I really could. GLD. You expect gold to be up more for how much the dollar's down, but yeah, I mean, GLD just might be setting up a much longer kind of pullback and base pattern. Okay, not too much kind of going on there. Yields definitely dropped off pretty substantially. Let me take a look intraday. We got that CPI data this morning. Just had a huge drop off. So we did come and snag all the way down below the low of last week. Obviously, we bounced here recently just a little bit. So that was what we kind of talked about last week, right? Was this big breakdown, looking for the retest up into this trend line, and then taking that bearish. With how quickly we did it on Friday, I was a little hesitant, but you know, I mean, if you stuck to the plan or you stuck to those guns, and you're looking pretty good today. And yeah, I mean, other than that, yield's not looking the best. Or shorter term and longer term. Yeah, even shorter term yields looking like they maybe want to break down, getting below this level a little bit, breaching below it. Got some lower highs coming in. Okay. And then 30-year, US 30-year. 30-year, yeah, 30-year has a much cleaner look to that breakdown, bounce, rejected off of that upper trend line kind of look. And it doesn't mean that yields are going to drop off here. I mean, it might just set up a much more sideways choppy action. Something like this. And we'll see what happens later on, but it could do something like that. Just kind of gets in there and kind of bases for just kind of chop sideways. 10-2 inversion, kind of just hanging out. All right. HYG, nice gap up here on bonds. Yeah, I'm pretty sure all the bonds are going to have good gap ups from those yields that dropped off. Pretty solid. I would really like to see the HYG close above this 77.5 type level. If we can get up to like 77.55 or and higher by close, that would look a little bit better. I would like that. LQD, yep, nice gap up here. Not too bad. Okay. Yeah, not looking bad at all there on the LQD. TLT kind of the same thing, and we had that move inverse of the bonds or yields, right? Had that pullback right to that downtrending line. And we had that bounce off of it. Started the bounce even yesterday. So yeah, looking pretty good. Looking pretty good. That's some pretty good moves here on bonds and yields over the past 3-4 weeks. Okay. All right. So, how is the rest of the markets kind of doing today? Yeah, tech's going to be crushing things today. Real estate started out pretty strong. And that makes sense, right? We had yields dropped off start the day. Real estate, though, has pulled back quite a bit throughout the day. So intraday might be one of the bigger laggers. But tech, yeah, outperforming pretty good. Real estate and discretionary is outperforming. Industrials underperforming. Financials, materials, healthcare, utilities, communications underperforming. The lower end of the day, energies and staples. Okay. And taking a look. Intraday, we got tech doing pretty good. Discretionary is also doing pretty good. Industrials, healthcare, financials, real estate there. Yep, negative. Utilities, materials, staples, negative on the day. Underperforming. And then communications and energies underperforming the most. So let me know if you guys want to take a look at anything. Other than that, just kind of want to look and see. Yeah, because we're seeing a pretty good discrepancy across. Like, it's not like everything's bullish. We're seeing quite a bit of selling here. A lot of these sectors intraday. People keep piling into NVIDIA. AAPL is back to life a little bit here. Tesla. Oh, Tesla doing pretty good. Okay. I'm going to have to go look at Tesla. Tesla's just been in a very kind of weird spot, man. Even throwing mixed signals, trying to throw that breakdown look, and then just bounces back today. Okay. I actually kind of like it bullish because it broke down, came and snagged this low from May the 10th and just barely snagged that low yesterday, and we are bouncing. So, yeah. All right. Take a look at some yield kind of projections. We got this morning, or I guess before we got the interest rate decision, it was basically 99.9% we were going to hold. Yeah, that makes sense, right? It looks like we are a little bit more of a hold there for July now. Okay, that might change maybe tomorrow. We are going to get PPI tomorrow, so we'll see if that changes some. Looks like the market is now expecting first. Well, I mean, it has been expecting first rate cut in September. We'll see if that happens, but definitely dropped off pretty good today for those odds. And maybe we get our first rate cut maybe September, and then maybe nothing, no changes in November. And then, come on. And then December, maybe we get 2 by the end of the year. So we got 4 more interest rate decisions through the rest of the year. Looks like maybe 2 rate cuts by the end of the year. Okay. Honestly, I don't know why we would be getting interest rate cuts unless something bad is happening. So. Benign U.S. inflation could support stock market laggers. Well, that's definitely not, because the laggers are still lagging. Stocks climb as bond yields sink with Fed in focus. Here comes the Fed. Yep. Here's the latest inflation breakdown. What do we got here? Auto insurance. Where inflation is and isn't, 12-month change in the price of housing and rent still pretty high. Restaurant meals, earnings, personal care. Okay. Overall inflation is 3.4%. Auto insurance up. Wow. Apple overtakes Microsoft to return as world's most valuable. AAPL 3.3. Nvidia's at 3.09 and Microsoft's at 3.268. I don't know why. That is ridiculous. I mean, I didn't get the impressions from the Apple AI conference. I didn't think it was that impressive. But hey, some people did think it was that impressive. Very cool. So, Apple, you're going back to the top for now. For now. Other than that, Outfunders, I don't really have much. We'll have to check and see tomorrow really what is the Fed kind of talks about today. And most likely, unless they kind of, the press asks specific questions, you're probably not going to get really good information, in my opinion. But yeah, we're seeing still pretty good areas of tech doing pretty good. Discretionaries. Amazon not doing as well today. And a lot of other areas not doing as well. Energy's not. Staples, yeah. Okay. Yep. All right. Outfitters, that's all I got. Have a great rest of the day. Take care.